8-month steady deceleration in headline inflation was brought to a halt with a marginal spike in the December 2021 headline inflation from 15.4% in November to 15.63% in December 2021. The surge in demand during the December festivities must have played a role in the marginal spike and reversal of the deceleration trend in headline inflation. Meanwhile, inflationary pressure remains a significant macroeconomic risk in the Nigerian economy as it serves as major concerns to both businesses and citizens, with food inflation, which is the biggest worry for the poor, which rose from 17.21% in November to 17.37% in December. But on the month-on-month basis, there was an increase of 2.19%. The core inflation, which relates to non-agricultural products, maintained an upward trend, increasing from 13.85% in November to 13.87% in December. This was largely a reflection of the impact of currency depreciation and the liquidity challenges in the forex market. Let's analyze the implication of this latest rise in inflation figure on the Nigerian economy and understanding what it also means for the masses. I have joining me virtually the Chief Executive Officer of the Center for Promotion of Private Enterprises, as well as the former DG of the Lagos Chamber of Commerce and Industry, no other person than Dr. Muda Yusuf. CPPE is an economic and private sector think tank group that advises government on issues bordering on economic development and policy framework. Good afternoon, Dr. Yusuf. It's good to see you.
Good afternoon, Tolu.
Yes, Dr. Yusuf, 8 months of consecutive decline is what we saw. And finally, it's up to 15.63% from 15.4%. And everyone is talking about the surge in demand around the festivities. What more should we be looking at regarding this increase?
Yeah, thank you very much once again, and Happy New Year to you and your team. Inflation has become a major issue, not just for the citizens, but also for businesses. Just as you highlighted in your introduction, the fact that we had the festive season, December, led to a surge in at least consumer demand, and that pushed inflation to 15.63. Actually, the increase or the spike was quite marginal. I think it was just about 0.23% spike. But the trend from the beginning of the year up to now has been that inflation has remained a very worrisome macroeconomic issue. Of course, some of the drivers, as you know, you mentioned the festivities, which occurred in December. We know that we had issues with the exchange rate depreciation, which has also been a major issue I think, for the past 2 years. And that has a major systemic impact on prices across all sectors of the economy. And in addition to that, we had the challenge of liquidity in the forex market, which has also affected output, especially in the manufacturing sector, as many of the manufacturers could not access foreign exchange for some of their critical inputs. Then from the agricultural sector front, we had the challenge of insecurity. As you know, food inflation has been one of the biggest problems that the citizens worry about. And generally, even if we talk about inflation, even though we have a figure of 15.63% as the headline inflation, if you look at the basket of goods that many of the ordinary people consume, you'll be talking of inflation of well over 50%. Because for some prices, for some products, prices have practically doubled in the last 1 year. Then we have structural issues also affecting outputs and affecting productivity. This has to do with the challenge, for instance, of energy costs, the challenge of transportation, and the challenges along the entire value chain of agriculture. Then there is the monetary dimension to the inflation, which is the CBN financing of deficits. When the finance minister was reporting on the budget 2022, part of the actual figures that she released concerning 2021 was the payment of interest of 1.1 trillion to the central bank on account of the ways and means. Ways and means is the monies borrowed by federal government from the central bank. So you can imagine what the principal will be if interest payment alone is over 1 trillion. And that shot up the debt payment or debt commitment of government from about 3.2 trillion, it went up to 4.2 trillion actual. So you can see the significance of that. So, but what is important about the monetary aspect is the liquidity effect and the money supply effect. Because CBN funds in any system is generally perceived, regarded as high-powered money. So it has a very serious inflationary effect. Then we also had all sorts of issues around the bottlenecks at the port, the cargo clearing issues and so on. So all these various bottlenecks are affecting productivity, affecting output, is constraining the supply side of the economy. So that is part of the reasons that we are having this challenge. Of course, there is the monetary aspect, there is the insecurity issue. So these are the issues, these are the major drivers of inflation. And I'm hoping that as we step into this new year, some of these issues will be taken more seriously. Because from all the commentaries from the key people in government, there has not been sufficient emphasis on the impact on inflation on the people. Because when we manage an economy, we need to come from the perspective of multiple stakeholders. It is not enough to just celebrate the rice farmers, that they are doing well, they are cultivating. What is happening to the consumers? The consumers and the citizens are also major stakeholders. What is happening to those who are processing? What is happening to manufacturing? What is happening to their cost of raw materials coming from agriculture? So we should have a much broader view of the economy in order to know or to appreciate the full dimensions of the impact of inflation and some of these macroeconomic challenges on both business and the citizens.
Good one there. DG, I was looking at some of the major drivers. Yes, I know you've identified some of them. And one, the big one, we've talked about it countlessly, is the FX issue. Security is also on one side. And of course, like you talked about, climate change and its effects on agricultural production. In all of these drivers, we can go on and on. High cost of the nations doing business, the ports, and all of this are major drivers of and cost of inflation and cost on the economy. Now, what are you looking at? What can be done, or let me ask that way, to actually fix some of these key issues so that we can start to move? Or do you think that we'll continue with this hike, talking about this increase in inflation? Is this how we'll continue in 2022, considering all of these major drivers that are identified?
Well, the outlook looks to me as if there may not be any significant change this year. I say that because if you look at all the key drivers that we have highlighted, I'm not sure there is anything on the horizon to give us hope that these drivers or these factors will change dramatically this year. If anything, I'm not sure that even in government, the impact of some of these variables are even appreciated well enough as a major issue in macroeconomic management. For instance, we are not likely to see any major shift as far as the policy environment is concerned with regard to the foreign exchange. So because as we speak now, the authorities are not even recognizing the fact that there's a major depreciation in the currency. Because the CBN has said it several times that it doesn't recognize the parallel market. And unfortunately, that is the operating rate in which a lot of stakeholders in the economy anchor their costs on, because they can't get much from the official window. Then we are also still grappling with this issue of multiplicity of exchange rates, very huge premium between the official window and the parallel market window. All of these are also affecting supply into the foreign exchange market. So for as long as you have those rigidities in the foreign exchange market, I'm not sure that the foreign exchange component of the problem will go away this year, for as long as we have the current governance in the central bank. As for security, I know the government has been doing a lot. Strategies are being reviewed, equipment are being procured. There's no doubt that the government is doing quite a lot, but the outcome is still not sufficiently justifying all the efforts. So we need to see a lot more, because from the reports we get almost on a daily basis, insecurity is still a major problem in many of the farming communities. So again, whether that will go away very quickly this year, we wait and see. Then we have the structural problems. Structural problems are not short-term issues, because we are talking about issues of roads, issues of railways, issues of energy costs, connectivity, issues of the ports, and all those issues. Again, we must acknowledge that government is doing something, but these are not things that you can fix overnight. These things take quite some time. So we are likely to live with the challenge of the high cost of transportation for a while. Then issues of climate change, that is not a short-term issue. CBN financing of deficits, well, that may be short-term because it's a policy decision. If the government decides today that CBN financing of deficits will be kept within the threshold specified in the CBN Act, that will be fine. But again, this is an election year. We are likely to see a lot of spending, a lot of election spending. Some of the politicians that have stockpiled some cash will be releasing them now, and the momentum is already building up. So there's a lot of liquidity that is likely to be injected into the system. So the outlook for me is not so bright as far as inflation is concerned. It's likely to remain elevated for most parts, for the entire part of this year. Oil price, as you know, is already around $88 per barrel, 8-year high. Of course, that is good for revenue, but it is bad for energy prices. That means that the cost of diesel, the cost of aviation fuel, the cost of kerosene, and possibly the cost of gas, those things will also go up, because all those are already in the deregulated space. So I'm not so optimistic that much of these things will change in this year.
Wrapping up now, there are recommendations here as we see, CEO, a lot of recommendations, reforming the foreign exchange market, addressing liquidity issues, and all of this, which you also you've tried to expatiate on. Now, I'm also thinking around subsidy. We've talked about this before too, and I think you're one of those that want the downstream sector to be, is it liberalized, or just to allow for demand and supply to work around that end. But if that happens and truly subsidies out, what do you think would happen? Some say we could have up to 5% increase, talking about inflation. What's your reaction to this?
Well, from the body language of the president, from the pronouncement by the Senate president, from the disposition of the political actors in the ruling party, I'm not sure that this subsidy will be removed this year. Unless we're able to get domestic refining to come on board. Because the balance of all the arguments and the swings is almost in favor of not removing the subsidy. So I don't think that will happen. If it happens, it may be a major shock, especially if we don't have refining capacity domestically. But from the pronouncement of the president, the Senate president, and all the political actors, especially in the ruling party, I'm not optimistic that this subsidy will be removed. And the implication of that is that we are likely to spend a whole lot more on subsidy this year. Now, just as I said, oil price is already at $88 or $89 per barrel. So that means that even the subsidy we are complaining about that it is high is going to even go higher. Because the higher the oil price, the higher the subsidy. So that is the scenario that we should be looking at. But what is clear is that we need to do something about this. It's a major issue in our economic reform agenda. If you have to adopt a policy of dual pricing, because I don't see the government being able to carry this entire burden for a very long time. You have to have a dual pricing, one for the NNPC PMS, one for the private sector PMS, so that if you have your fund as a private sector person, you can import and sell at a regulated price. The one that government has subsidy for, that can be subsidized. You have to find a way around it. And I listened to the chairman of Governors Forum. He said they are going to engage with labor, so maybe they will come up with a new model of dealing with this issue.
Sorry about that. Let's wrap up with, we expect the MPC to meet next week, and some are saying that there could be a shift. It could be a retention. We don't know what could happen, but what are you thinking along that line?
Well, it's likely to be a retention. That's my view. Because first, we are not yet out of the woods. The CBN has been consistently concerned about the challenges of growth. The growth is still very sluggish. Yeah. Output is still struggling. Unemployment is still high. So, and if you look at even the effectiveness of monetary policy instruments, I don't know how much the tightening of monetary policy can bring as a solution to this. Because already, the monetary space is already tight. We have a CRR, cash reserve requirement, of 27.5%. It's one of the highest. And if you talk to operators in that space, I'm talking about the financial system, the banks, effective CRR is far, far above 27.5. For some banks, it's as high as 50% or more. So the monetary policy environment is already very, very tight. And because it has been very tight, the traditional role of banking, which is financial intermediation, has been impeded for a very long time. Because practically all their funds have been mopped up either in CRR or whatever, or direct debits or whatever. So I think if you are talking about looking at inflation and all of that, I think it is better to look at all these critical drivers which are impacting on output, and critical drivers especially relating to the CBN financing of deficits. That is where the focus should be. Tightening monetary variables is not likely to solve any problem. If anything, it can only worsen the interest rate situation for those who are investors in the economy.
I must thank you so very much, Chief Executive Officer, Center for the Promotion of Private Enterprise, CPPE, Dr. Muda Yusuf. Thank you very much for joining us on Business Nigeria today, and do enjoy your weekend.
Thank you very much, my pleasure.